Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and we're going to be talking about hard assets, assets that stand the test of time, especially during these times where inflation, at least from the government's perspective, is at 7% plus. But of course, when you go to fill up your gas tank or go to the grocery store or start looking at your energy prices, et cetera, it's probably closer to 15 easy. This week, Jerry, the prices, the Dow, it went down this week. A lot of indexes were down this week, and gold was holding steady. It did come down a little bit, but we're still holding up over the $1,900. Silver is still hanging on to most of the gains that it's had over the past couple months. The first article I wanted to bring to the table here is from a blog that says the title is "Something Can't Fall. If something can't fall on bad news, then it can't fall at all." Mm-hmm. Do you think that's a good characteristic of what we're seeing in the gold and silver market right now?
Yeah, it's very characteristic of the gold market. Very resilient despite a rising 10-year treasury yield spiking towards 3%, which the algorithms suggest to sell gold because of the rising yield. So you want to chase the yield, so therefore you want to sell the gold off. So you had a little bit of a pullback in the gold prices because of an algorithm trade on the COMEX, but we know here at Guildhall, nobody's selling their gold. Nobody's coming back and selling their silver, unless they obviously have to if times are tough. But overall, I would say overall our sales are just at 95%, whereas people are not selling their gold, Jeremy.
What do you think is the reason? What are you hearing when people are contacting you? What is their main reasons that they want to be involved in precious metals today?
So many uncertainties. There's about 5 or 6 various issues, but it all culminates with our currency. People are now seeing the pumps, they're seeing the prices, and are now taking measures into their own hands. Many people have pulled cash out of the bank, so they want to have a little bit more control over their money. But they realize if I'm sitting in cash, and there is rising inflation, not at what we were told at the all-time high. Well, CPI in Canada came out this week at 6.7, smashed expectations, coming in real hot, but 6.7 doesn't reflect real-world inflationary data here in Canada. So people are, they're scared of inflation. Can it happen here? Of course it can happen. The fabric of any strong nation is the currency. So with a currency issue, you have to convert, and you have to do it now. There's other concerns as well. There's government encroachment. This is a huge topic of conversation that we're having almost daily, that we have to address. And more so, social divide. I'm getting a lot of that right now. People feel
Oh, really? In what sense?
Our clients are a different breed. I would say that the furthest of the extent. I'm not going to get into the politics of it, but we understand. We see things a little differently, and because of that, we've seen families get divided.
I see what you mean.
Social divide has happened, and it's very unfortunate. But I think Canada has never been this divided ever. It's really unfortunate.
Yeah, I mean, obviously the lockdowns and such has created a lot of tension amongst lots of families. We did notice a lot, maybe 6 months ago, people would come in. We talk a lot of geopolitics at Guildhall with customers, and they felt kind of alone in their thoughts. And I did notice that the convoy, of course, brought a lot of people together. It emboldened many people to say what they were really thinking, and so I don't think people feel that way anymore. But I think what's happening is the inflation side is glaring. Mm-hmm. I think you can talk about anything, any aspect of the market at all. You can go geopolitics, you can go supply demand, you can any types of things you can imagine. But I think the main glaring issue is inflation at 15%. Mm-hmm. For years, we've talked on the show about the idea that if the government stated inflation's at 2%, but real world inflation is around 6%, then you have a negative real world return of 4%.
That is correct.
So what are you doing to overcome that? Okay, you might be doing some investing, and if you're getting 8%, then okay, you're a little ahead, right? Gold is not an investment. Gold is money. Gold and silver are money. When you acquire them, there's no counterparty risk. When you think about putting money into a bank and getting some sort of interest on it, it's because you're an unsecured creditor of the bank. When you make an investment, let's say you buy Apple stock, you're hoping that this company produces a fantastic product, that they're going to make it with great margins, and that everybody wants to buy it, and they're going to be super profitable, and there you go. But there's a counterparty. The counterparty is Apple. You're hoping they're going to do great. When it comes to paper versions of precious metals, the counterparty is the entity that physically owns that product, not you. So when you physically own gold and silver, there's no counterparty there. And the idea as well, more importantly, when it comes to gold as money, is that it preserves wealth.
Absolutely.
The currency that's in the bank right now is not preserving your wealth. What your $20 bill buys you today will not buy you $20 worth of goods in a year, in 2 years, in 3 years. Yes, there's a $20 bill in 1980. Yes, there's a $20 bill in 2022, but they do not buy the same things.
Not the same thing.
They are not the same thing at all. Gold does that. Gold will maintain the purchasing power. So I don't understand why there's not even a bigger flood to precious metals, because if people understood that you have $100,000 in the bank, you might as well burn $15,000 of it right now. Just burn it.
Yeah.
Next year you're only going to be able to buy $85,000 worth of goods. So what are you doing? You put that money into a GIC at 3% over a 5-year period. What does 3% get you? What is that getting you? Nothing. You're losing. Oh, but it's safe. Is it? It's a safe loss. It's right. A guaranteed safe loss.
Yeah.
If you understood the game. What's the game? The game is government understates inflation. Real world inflation is much, much higher, and they get to secretly abscond with your wealth. If you understand that game, you're going to do everything you can to make sure that doesn't happen. It should never happen.
Now, I have, in relation to the Canadian inflation data that came out this week, CTV reported, they gave us kind of a scorecard for the items that are going up in Canada. For example, gas prices, they have a 39.8%. Groceries are up 8.7%. Passenger vehicles up 7%. Furniture up 13%. Versus the information that's coming from the U.S. Bloomberg terminal out of the BLS, where here is the U.S. inflation scorecard. So let's do some comparison. That was Canada's data. We're sitting at 6.7% CPI. However, in the U.S., it looks much more different. House price growth up 69%, food up 58%, not 8.7% here in Canada. Gas is up 72% in the States. Diesel's up 154%. The Fed's balance sheet is up 21%. Mortgage rates are up 83.3%. But CTV's telling us groceries are just up 8%. How much more of this are we going to take as far as this the relay of data? Canadians don't believe this anymore. Canadians are seeing real-world inflation with what it is, and protecting against this erosion of purchasing power, there is just one old family recipe. The old family recipe has always been real assets, real gold and silver. And we're not talking about gold proxy investments that our investment community may be introducing to people, ETFs, and maybe paper certificates, or maybe even a stock. But there is no direct bullion holding being offered. We are talking about owning a direct physical allocation of precious metals. You hit the nail on the head regarding counterparty risk. A direct physical allocation, now this is coming from the Ibbotson Associates, foremost leaders in asset allocation models. A direct physical allocation in precious metals provides an unencumbered investment with 1, zero counterparty risk, 2, sufficient liquidity for large investors, And 3, no dependence on management for performance. That is what gold provides you. You're now decoupling your wealth, your family's future away from all of the lies, all of the madness, because as this progresses, they're cornering themselves. This is probably the worst social and monetary experiment in history besides what's happening in Japan. The Japanese currency, ladies and gentlemen, is falling like an anvil in water. The gold price is at an all-time high in Japanese yen. It continues to go up daily. There's no cup and handle there in Japanese yen. It's just going straight up to the moon. And you can't have that happen in Japan because they are major exporters. And when you have this issue with currency, we're going to have issues with items coming out of Japan.
And now you're seeing the scapegoating, right? There's a lot of politicians scapegoating on what's happening, and we're gonna cut through the scapegoating and tell you what the real problems are and how you're gonna help yourself solve them, and not only just survive these major inflationary periods, but also thrive. The number 18778-SILVER, the website guildhallwealth.com. If you want to own physical precious metals and you've never purchased before, go to our e-store. It's guildhallpreciousmetals.com. Pick up an ounce of gold, maybe a tube of silver maples, maybe some 10-ounce bars. Just get a feel for it. Just dip a toe in the water. Start to understand that this is a physical asset, that this is a retail product that you're acquiring. And then you can move into other things like their storage or registered accounts, RSPs, TFSAs, where it's all physical, all fully allocated, all fully segregated, and you always maintain full, complete ownership of your product. To learn more, go to guildhallwealth.com, the number 18778-SILVER. This is The Real Money Show on AM 640. We'll be right back. Welcome back to The Real Money Show, the number 18778-SILVER, and the website guildhallwealth.com. We're talking about physical gold, physical silver, the value of having that as part of your portfolio, and especially during these type of inflationary times, and potentially even deflationary times at some point down the road, that it's important to have your wealth somewhere where it's going to be retained. As we talked about in the last segment, the idea of, government stating inflation at 2% or 7%, but real world inflation being much higher than that, then you are losing wealth rapidly. And it's not just from the inflationary side, Jerry. It's also the fact that you're taxed 35, 40%. You pay 13% on anything else you buy after tax dollars. So the amount of the wealth that's being taken from you, that's being confiscated from you, you've got to take a stand at some point and say, this is craziness. This is craziness. And I think this dovetails nicely into an article you presented with me before we jumped on air about what happened during the Roman period in terms of their money system. Can you tell us a little bit about it? Because I think it's going to be interesting to talk about or to compare what happens to societies when you start to degrade the money.
I say a lot on the show, and I say a lot to clients, nothing is new under the sun. And this is very true, especially when it comes to currency. So there was a massive discovery this week. The headline is from sciencealert.com. An ancient financial crisis has been discovered in Roman coins. So just last week, out of the University of Warwick, we had some archaeologists started to investigate and start to test the denarius, the currency of ancient Rome, in light of an essay that was written over 2,000 years ago by Cicero. He had an essay that was on moral leadership, and he really honed in on a line that boggled historians to this day. One of the lines that Cicero wrote was, back in Rome, in ancient Rome, he wrote the coinage back then was being just tossed around so that no one was able to know what they had. And archaeologists and researchers couldn't really pinpoint what they meant, and they knew it was a currency issue, but so many things were happening in Rome at that time.
So he made a comment that the currency is being tossed around, and people didn't quite understand what that meant. Is that what you're saying?
That's correct.
Okay.
So what was happening? So these researchers in the UK, they broke down the composition of the coins, and what they realized was Yep. By 90 BC, the denarius was composed of pure silver, but that it dropped 10% only 5 years later. The denarius first dropped to under 95% fine, and then it fell again to 90%, with some coins as low as 86%. And these were the schemes that the government were using. Schemes of, as a sleight of hand, the currencies were being eroded right under the citizens' feet. They didn't know what was happening, but they realized our currency is becoming more and more worthless. And what was happening even further was there was social unrest, there was election issues. It led to a just massive social strife. And these are schemes, if we can relate to today, what we're seeing, schemes like quantitative easing. Sounds great. 1, 2, and 3. Even how the measure of our inflation has changed from 1980. They used to include food, fuel, housing, not today. And even rate manipulation, LIBOR, FX, everything is being skewed, and we are the dumb ones. We're the ones that, okay, if you're telling me that the real world inflation is 6%, meanwhile, my dollar's dropping every single year, guess what? I can't give a $20 bill anymore as a gift to a relative. I got to bump it up to a 50 or 100. That's right. And this is just amazing discovery out of the UK that really cements the argument of sound money. And what they actually had to do was there was to conclude, there was one of the, I guess, Roman tribunes. He realized, okay, we got to do something with the currency. So they eventually brought it back to sound money. They brought it back to a 1-to-1, or with some silver and with bronze. So they were able to not only restore the currency, but they brought back trust. They brought back credibility to the society, and Rome was able to continue and move on.
So what this tells us is that once you start to degrade the currency, you are degrading society. Another example of this is the way they talk about, well, basically to say that in this world, an ounce of gold is an ounce of gold. Okay? An ounce of gold in Australia is 1 ounce of gold. An ounce of gold in Iran is 1 ounce of gold. It's a measurement that can't be changed. But when you talk to a central banker and you say, not what's a woman, but you say, what's an inch? They say, well, what am I measuring? No. There's no such thing as relativity in this sense. You have to have truth to a certain extent. You have to be able to say an ounce of gold is an ounce of gold, because it helps you make sound economic decisions. Mm-hmm. We've had one little test I've always done in the office to help make a demonstration of this is I'll ask someone, what's the value of the dollar? And they say, oh, well, it's 126 against the American dollar. Oh, okay. What's that worth?
Down the rabbit hole we go.
Down the rabbit hole we go. Because you've got, they're both floating.
What is money?
They're both floating. They have no anchor to anything. And so it's completely relative. What you end up with is, Jerry, I don't know how much you weigh if I'm using a measuring tape. Mm-hmm. That's it. Right. So this is the trick. This is the sleight of hand. This is the way they get you, is they want everything to be relative so that you don't notice what's going on. And little by little, they get you. And of course, if you just slightly start to raise taxes a little bit, if you make inflation and you're taking away on the other side, then people don't know what's being taken from them. Before it's too late, you're already weighing cuffs, mm-hmm. Right? And that's really what this is.
Yeah.
And so when you look at what happened in Roman period, you can see degraded the society. Mm-hmm. And then, of course, they had to go back to a standard. So the $1 million question, Jerry, is, are we going back to a gold standard?
Well, seeing how the core of the issue was not politics, well, yeah, the politics led to the erosion of the currency. The solution to bring back the trust in the political system back then in Rome was to restore the money. And for thousands of years, and we're literally going back thousands of years here, Jeremy, back to 90 BC. Yes, we have to go back to a standard that is relative across the board, that crosses borders, that crosses classes. This is one way of restoring faith in the first. Like, you got to deal with the currency. We do have a problem with the Canadian dollar, and it's a tremendous problem, and it's much higher. It's a much worse than what the media is saying that it is. And the only way to do this is to back it up yourself. Become your own bank. Become your own central bank, if you will. Acquire the gold, convert out of worthless currency, paper, into the real thing. Not a proxy. We're not talking about silver or gold certificates, which I think the rate at which the paper to physical, it's about a 400 to 1. So for every physical 1 ounce you have there, you have 400, 500 pieces of paper that are supposed to look like and feel like gold and silver, but it's not yours. You want the real thing. You want the real money in your portfolio at all times, whether it be to take home, throw it in the vault outside of the financial and banking system. And that's what it is. You can't have, gold is one of a kind. Silver is one of a kind. It's a financial asset that does not involve the financial system. It is the system that is sick. But your financial asset must be healthy. And that one proven financial asset, historically, Jeremy, history does not lie here. Math doesn't lie here. It's gold and silver, hands down.
And there's only so much of it around. I think the amount of gold, all of the gold that's ever been mined, even going back prior to Roman times, is maybe worth 11 trillion. Mm-hmm. The government's printed that last year. They printed that in a snap. Right?
It's laughable.
Like, you're talking thousands of years of mining to get to that amount of gold. And of course, I think we are going to go back to some sort of standard, because what we're living in right now is not just an illusion, it's a delusion of what value is. And we've got to move back to value. Now, it's already happening. Countries around the world in their trade agreements for years now have already been starting to get rid of the dollar. There's been moves of that. Now, Russia made a big move because they put on the Americans put the sanctions on, and the Russians said, okay, we can work without that. Guess what we're going to do? We're going to protect our dollar by pegging it to gold. And ever since that has happened, Jerry, now I know it's only been basically a couple months now, or just under a couple months, but there's been a floor under the price of gold. We haven't seen gold go back down below 1900. Maybe it will. Maybe on paper it does. But the fact is that the ruble got strength again, and they put a floor under the price of gold, because if the price of gold does go down too far, you can have an arbitrage. You can say, okay, I'll take delivery of the gold. Oh, you really want the paper price of gold to be $1,700 an ounce? Send me every one of my ounces.
Yes.
And I'm going to go to Russia and sell it. Right? Now, maybe it's not that simplistic, but it's just to demonstrate the point that they're backing, and they're starting to make trade deals that do not include the US dollar. And it's not just Russia, it's all the BRIC nations. It's half the world. Half the world are making decisions now saying we're not going to use the US dollar. And the only way you're going to, maybe we will live in a multi-currency, polar, reserve currency world. But you're going to need something to put the trust back in. And I saw an interesting stat a couple weeks ago. They were saying, the faith in government in the States in, I think, the 50s was at 70%. It's less than 30% now. Mm-hmm. That's how much faith people have in the governments.
If that. So this is a, I do feel overall it's a little bit of every man for himself. Like, take care of yourself now, because I don't think, what's the famous quote from Reagan? The last words you want to hear is, I'm from the government and I'm here to help. Right? So, you really have to take care of yourself. You have to take care of your family. And one of the things that people are doing when they're owning physical gold and physical silver is they're removing themselves from harm's way in terms of being in the system. If you have equities, they can disappear overnight. You have anything digital, it can disappear in a snap. How? You just turn off the lights, right? Here's the other thing before we go to break. The powers that be, heads of government have been saying,
oh, there's going to be attacks, right? Internet attacks and all these type of things.
Right.
They've been talking about, oh, there's going to be food shortages because of Ukraine. And if you do the digging, you're going to see that there's a whole bunch of food processing plants in the States that are going up in flames.
Up in fire, yeah.
Well, that's got nothing to do with what's going on in Eastern Europe. Absolutely nothing.
No.
But it
They'll get the
sure
blame.
as hell smells like not just fire, but disaster capitalism to me. So let's talk a little bit more about that and conspiracy theories.
Ooh.
Are conspiracy theorists being proven right? I don't know. We'll have to talk about that in the next segment. The number 1-877-8-SILVER, the website guildhallwealth.com. Remember, physical. You have to own physical. If you can't hold it, you don't own it. The number 1-877-8-SILVER, guildhallwealth.com. It's The Real Money Show on AM 640. We'll be right back. Welcome back to The Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, this was a post on Instagram from Jack Posobiec from CTV News. Conspiracy theorists keep getting things right. Experts say that's dangerous. Movements like the Freedom Convoy are fueled by conspiracy theories, and when those theories are correct, it legitimizes them. This is the craziest thing I've ever read. If a conspiracy theory is proved right,
Which is the truth.
which is obviously then proven to be correct, no longer a conspiracy theory, this is a problem. So what is being told here? It's the mainstream media telling you that when they lose control of a narrative, because they can no longer call you out as a conspiracy theorist, right? Which a conspiracy theorist, you could be right, you could be wrong. You're recognizing patterns, right? One of our favorites here on the show is Lynette Zhang, right? We've all followed Lynette Zhang. She's fantastic in terms of her analysis of the gold and silver market.
Yes.
And for a very long time, one of the best things about her YouTube channel was that all she was doing is recognizing the patterns. Look at where the money printing's going. Recognize the pattern. Look how much the Fed is intervening in the overnight lending. Look at that pattern. Look at how these patterns play out over history. We did it in the last segment, Jerry. Look at the pattern of Rome. When they start debasing the currency, so went the culture. So went society. How did you pull it? How did you rein it back? You got to get the consistency back into the money. You have to get the standard back. So it's all about recognizing patterns. And this is interesting because as a conspiracy, one of the conspiracies would be that gold people would say the market's manipulated, right?
Yeah.
And you'd be told that you're a conspiracy theorist. Is the gold and silver market manipulated? Let's talk about it.
Every market is in one way, shape, or form manipulated, from LIBOR to FX, interest rates, gold markets. So yes, markets are being manipulated. In the precious metal space, manipulation happens when you have institutions and banks creating derivatives, or we talked about we
Paper
call
supply.
them proxy, that's supposed to look and feel like the real thing. But this gives us hope, because when you have
On paper, it looks and feels like the real thing. Not in real life,
Yes.
but like on paper, you look on your screen and you say,
I have
I
gold."
own this much gold.
Right. And especially if someone is advising you on that yes, you know what, gold's a little bit too hard to store, for example. That's a myth, by the way.
These are all great myths. It's too heavy to store.
It's volatile. Again, you need to, if you have these questions,
not enough of
we'll
it.
share the report with you. The Ibbotson Associates report. This is not written by Guildhall. This is, one of the foremost leaders in asset allocations who've tested the Sharpe and Sortino ratios, which measure volatility, and adding gold to the mix of your portfolio actually benefits your portfolio. So going back to these proxies, they could just create supply, artificial supply. So whenever you need to temper prices, because you mentioned a lot, Jeremy, that gold is an economic barometer of health. And if you allow the gold price to act normally with freedom and truth and honesty, then gold prices are going to go skyrocketing, and they need to create these derivatives to temper the price. But the problem is, which is our solution and their problem, is that when you take the physical ounces out of the market and demand delivery, the paper prices go up in smoke. And that is part of the reason why they say it's a conspiracy theory, to quell, the delivery. But people are not listening. They're coming to us. They're taking delivery. They want to get it in their RSP. Even still, the way we hold our physical bullion, even though it shows up in an RSP, Jeremy, is that we hold it entirely outside of the financial system. These bars are titled to you, the owner, not to Guildhall, not to me, not to any other entity. This belongs to you, the owner. And you know that you own it because you can go visit it. You can take delivery of that one particular bar. Try to do that with someone else's gold.
Now, here's another issue with trying to manipulate a physical market with paper. I start from the premise of this. If you had a printing press in your backyard, you know what's real and what's fake. What's the first thing you're going to do with that printing press? You're going to buy stuff, right? And of course, you're going to try to keep the prices low on that stuff so that everyone else doesn't realize that your paper's fake and run into that market. So the first thing to understand is that this is a fiat currency system, which is obviously failing because you can start to see the changes around the world. Yeah. But it's a fiat system, and the first thing you want to do is get everybody to believe in that system and not believe in reality, and believe that somehow that has value to it. And maybe it works for a while, but then eventually it ends. Take the Bretton Woods, for instance. They peg gold at $35 an ounce. How do you keep the peg? If the price wants to rise, you release physical product into the market. But at some point, you get people like Charles de Gaulle who say, wait a minute, how much money are you printing? And you've got gold at $35 an ounce and I can convert it at this price? Give me the gold. And eventually the U.S. says, well, we don't want to keep giving gold at $35 an ounce because given the amount of money we're printing, it should be worth way, way more. Mm-hmm. I can't just keep giving this out at a loss, right? It's a loss leader. So what do? They go, we'll shut the window. Where did gold go? $850 an ounce within a decade. Let's keep on this topic of what happens when these so-called conspiracies become reality and the paper scam fails. The number 18778-SILVER, the website guildhallwealth.com. Hint, it looks really, really good for those who are holding physical metal. It's The Real Money Show, and we'll be right back. Welcome back to The Real Money Show, the number 18778-SILVER, the website guildhallwealth.com. We're talking about the physical gold and silver market and the idea of manipulating this market. Is it manipulated? I'm going to say 100% yes. At the same time, though, Jerry, I want all of our listeners to keep in mind here that gold is up 350% over the last 20 years. So when we're saying the word manipulation, it's not you can never win at the game, okay? The price keeps rising and the value keeps rising, and it's beating inflation over that 20-year period. What we're talking about is the fact that they're able to tamp down the price using the paper market. And also, as you mentioned in the last segment, Jerry, by using the paper market to kind of create what I call the steam valve on a pressure cooker. Mm-hmm. If we can divert funds to paper instead of getting you on the physical, then we're going to be moving that pressure on the physical market away.
Buys them time.
It buys time. Now, that is... So the time. At some point, someone says, well, I want the physical, not the paper. And that's when the game ends. The advantage is that right now, the paper prices are low. They have been pushed low. Why? Because if you have the paper scheme going, you don't want an exit. And if the price of gold and silver are rising rapidly, people intuitively know that there's a problem with the financial system. You know, gold is an intuitive thing. It is a subconscious thing. It's a societal subconscious thing. You look on a cover of a magazine for your investment for the year 2022, and I'll tell you what's going to be on the cover, Jerry. It's going to be a golden egg. Okay?
Absolutely.
People understand this. So you want to get rid of that exit sign so you can keep people in the fiat currency, because if it's in gold, you can't steal their wealth. So you want to get them out of their gold, right? And if the price looks low, well, who wants to own that? Well, at some point, people say, I don't care. And of course, that is pushing the price higher. Look at the premiums today. And this is the big crack. The premiums on precious metals are way higher than the paper price. If you wanted to buy a 100-ounce bar of silver 3.5 years ago, it would have been $1.20 over spot. Today, it's $4. Right? So the price isn't $26. It's clearly $30. It's already $30. So the paper price scam isn't working anymore. And the demand for physical breaks that market. Just like the demand for physical broke the market in 1968 through 1971, we're having the same breaking pattern in the market today. And then you had the Basel III rules come in, which is something we've discussed. Now, those went into effect, I think, earlier this year, or a bit last year. We've talked about it on the show. You can go to our YouTube channel and learn about that. And when it happened, or what we're seeing now, is the day that it got implemented, the COMEX came out and said, essentially, they changed their rules. Let's talk about conspiracy number 589.
So we got gold and silver conspiracy number 589. Really what that is, Jeremy, it's the COMEX rule 589 under the category of no bid. It's when all the weak hands have sold their physical silver. We've had that already. I think we've had that a few years back. As I mentioned earlier, no one's selling. But when no one else wants to sell any of their ounces, in this case, auctions will be introduced in the U.S. through the COMEX. And this rise in precious metals will be brutal. It was published in December of 2014, and it provided this exact scenario. If the bidding on the silver, and this is for silver especially because we know how important silver is. And we'll go through the Silver Institute's World Survey shortly.
Oh, I got to interrupt you on that for a second, okay? So we've talked about on this show that gold is the peak of the inverted pyramid, right?
Exter's pyramid, yeah.
Of Exter's pyramid. And silver is actually the peak.
Yes.
Right?
Yeah.
And it got me thinking, I was like, wow, it's really like Argyle diamonds. Because they're the peak of the pyramid for the Argyle mining because it was 1/10 of the production. So when you look at the diagrams in Argyle books, there's a pyramid and they put the pinks right at the tip.
Silver tip bullet.
Silver's the same. Yeah.
Wow.
Silver tipped bullet. I like it.
So this is the auction. So if bidding on the silver goes up by 3, and this is a scenario where no one wants to sell the silver. It could be the mines.
Right.
It could be the wholesalers. We're seeing that. Wholesalers don't want to sell right now. For what? Worthless cash?
Well, also because there reaches a point, just to demonstrate this, there reaches a point that if the price is moving higher and it's so difficult to get the product, you do not want to sell.
That's right.
If a market is moving that much higher all the time, why would I sell? Right.
So this is
from the miners. Right? They've been mining this and selling it at a discount for years. And now all of a sudden they've got this hot commodity. It's rising in price and they can't get it to the market fast enough. They say, no, I'm not selling it. And then it could go through the wholesalers and the retailers too. Market's moving so fast. It's so hard to get the product. I can't replace the product. Why would I sell it?
Exactly. And this is coming from the COMEX themselves, who we know are naked short sellers. They have no silver. They have no silver in their coffers. So this is a scenario if the bidding on silver price goes up by $3 without anyone agreeing to sell at that price, the market pauses for 2 minutes. Then the auction resumes. In 10 or 12 minutes, the price can go up to $12. As the daily increase limit is reached, the market will be closed until the following day without any fixing. Without fixing, no one will be able to buy or sell physical silver. The next day, the scenario will be in play. The auction will resume, and with the initial price plus $12 of the day before, if and no one wants to sell, the price will rise again by 12, plus 12, plus 12, plus 12. This is the silver squeeze, Jeremy, but this is an institutional death toll on the COMEX and all of the paper pushers in the physical silver market. The silver squeeze is on. This is the silver squeeze 2.0, 2.1, and it's just ramping up.
Yeah, you had when COVID first hit, everyone jumped into the gold market. Many people jumped into the gold market. Those people haven't sold. Then you had the silver squeeze last year. Those people haven't sold. And now you have what's gone on in the last few months in the market where distrust of government overreach, people are inflation. People are saying, I got to get out of this market. 589 was implemented the day after the Basel rules came out and said, you got to get to a 1-to-1 ratio. And the COMEX knew they couldn't get to a 1-to-1 ratio. So they put into place Rule 589. Ironically, or maybe not ironically, this showed up on a Simpsons episode.
Yeah.
Bart Simpson writing Rule 589 on the board. Mm-hmm. Okay, I don't know. Maybe to you, it
had to do with the
XRP.
XRP to 589, which it didn't happen. But we all know that if you follow conspiracy theories, XRP is a very important one. So we keep an eye on that. I think we hold a little bit of XRP just to say that we have some.
Because there's a connection there as well between XRP and gold if you're following a little bit on that. So we'll talk about that on some other episodes of the show. But yes, the scheme could blow up. It's destined to blow up. It's all about physical. These are tumultuous times. Anything can happen. You want to make sure your wealth is safe, especially for your family, especially for yourself. Get it out of the system, at least a portion of it. Make sure that you've got that peace of mind. The number 1-877-78-SILVER, the website guildhallwealth.com. Thank you so much to all our listeners for joining us this week. It was very enjoyable for me. Great to have a discussion with you on that, Jerry. And of course, the conspiracy theories. We'll talk about more of those on more episodes of The Real Money Show. If you've missed an episode, please check us out on YouTube and follow us on Telegram, where we've got some great articles that we put out throughout the week. And we will speak to you next week on The Real Money Show on AM 640.